50% of the users trading or investing or looking into RWA sector within Solana are deemed not active. So is this incredibly shocking? No, I don't think so. In fact, I think it presents an even better opportunity. Here's why. The earliest wave of real-world assets started with real estate. And fast forward to today, there are over 7 major asset classes within the RWA global market. RWAs are tangible assets that are tokenized to hold ingrained value, which somewhat transfers the value from the actual asset in itself to the token of the assets and can be traded on the secondary marketplace. Right now, the global value of the RWA industry is estimated to be about 12 billion US dollars, with over 60,000 asset holders and about 100 asset issuers. And these statistics doesn't include stablecoins, because stablecoins has a much more larger cap than these statistics. These statistics primarily represent other commodities like stocks, bond, private equity, real estate, US treasury bills and whatnot. And interestingly, majority of the asset issuers or the protocols issuing these RWAs have tokenized these assets on public blockchains like Ethereum and Polygon. However, in the last 6 months, there's been an increased RWA user activity, product activity, transaction activity, and protocol issuing activity on Solana, with about 30,000 total users, which we might call asset holders, particularly holding asset classes on projects like Parcel, ISC, ATR Trade, and Check. Without any doubt, the user activity in the last 6 months has literally increased on Solana. So when we look at user growth analysis, particularly looking at churn rate, looking at retention rate, we're looking at acquisition rate, we're looking at multi-active users. Over varying periods of time, the data actually shows that ISC's total active users started way earlier than many other projects on Solana. But Parcel, Check, ATR traders, they've had the most active users on Solana in that same period of time, with Parcel particularly peaking at 125,000 users on April 15. Looking at acquisition, Parcel has acquired the most users in that same period of time in the past 3 months. But this is the interesting part. They've lost the most users within the past 60 days. In fact, they've lost more users than ISC, than ATR Trade and Check combined. And when we look at the user transaction analysis, we also notice how Parcel averages the most transaction compared to other RWA projects building on Solana, like ATR Trade, Check, and ISC, which are the actual core 4 projects that I analyze in this analysis. However, when you look at the total average transaction value per project, you will notice how ATR Trade has the highest or has the most average transaction value compared to Parcel, for in fact, and Check or ISC, which is interesting. The user segmentation analysis is probably my interesting part of this entire analysis. When I was writing the SQL codes, it segments users across all 4 projects into 8 categories. This segmentation is actually done based on the transaction frequency per user over a given period of time, or the distinct transaction frequency per user over a given period of time. And the majority, and I mean 50% of the users trading or investing or looking into RWA sector within Solana are deemed not active. So is this incredibly shocking? No, I don't think so. In fact, I think it presents an even better opportunity on Solana. Here's why. Certain reward asset classes like gold, silver, commodities by the way, or real estate, rental properties in real estate, are more consumer facing products and will most likely thrive a whole lot on Solana, because Solana is arguably a consumer facing chain. So these kinds of asset classes would appeal to consumers, and that's because people already have asset classes like gold and could be incentivized to actually get a tokenized form of it, which actually presents the argument for reward assets. Also, it's not news. I mean, you already know that Solana processes incredibly cheap transaction fees. Very few chains process more cheaper and more faster transaction than Solana. I mean, you could literally hand count them with your hands. And this is an interesting proposition for other reward asset classes, which could be built on Solana. This makes Solana a proper destination for institutions that are looking to actually issue tokenized versions of bonds, corporate bonds, US Treasury bills. So institutions could pretty much be more incentivized to actually build on Solana and actually have more asset classes on Solana, which could present a better opportunity on the long run. As much as this starts as shocking, there's an incredible opportunity for RWA assets or reward assets on Solana. And when you look at the data closely, you notice when we looked across all these 4 projects, activity really started kicking off around February. So we could infer that the RWA industry or the RWA vertical on Solana is still pretty much new. It's an incredible opportunity, and I'm really excited and I'm really stoked about the possibility of reward assets on the chain. I look forward to what folks are building, and I'm really excited about reward assets, especially with regards to the major contribution they currently have to Web3 and crypto.